Alright, good morning. Today we're going to run through 3 new transactions using a different type of business than yesterday. Yesterday the business was a fake business owned by Lil Wayne who made money by selling music and giving music lessons. Today's business is going to be a clothing business called Retroware, and the owner name is Miss Lyons. Now the first thing you need to pay attention to is that a chart of accounts has now updated. Again, remember, chart of accounts can be customized however a business wants. They customize it based on the types of goods and services they sell, the kinds of assets they own, etc., etc. So Miss Lyons' business might have some assets called shelving units because she needs something to put her clothes on. Inventory, the names of her creditors are going to change based on the new kinds of suppliers clothing store might have compared to a music company like Lil Wayne's. So again, chart of accounts can be customized however businesses want, but generally speaking, assets are always listed first. They start with 1. Liabilities listed second. They start with 2, so forth and so forth, all the way down to expenses. All right, let's get started. Transaction A. Miss Lyons sold $15,000 of winter retro sales on account to Kim Kardashian. Step 1. Is this a business transaction? Well, for the sake of time, you can assume that, again, all transactions are going to be business transactions. Step 2. Identify at least 2 accounts that are affected. Well, let's look at keywords. She sold something, so right away I know whatever revenue account is going to be impacted. Now, the second thing I need to ask myself is when she sold this, did she receive cash or is she going to get an account receivable? Keywords in the transaction says on account. Therefore, Kim K is going to owe her an account receivable $15,000. Let's look at chart of accounts. Now, if we look at revenue, sure enough, she has a specific account called Winter Retro Sales. By breaking her revenue into 4 different accounts, she can get a better idea at the end of the year what kind of clothing is selling really well and what kind of clothing is selling poorly. Then she's going to have an account receivable for every customer typically buys goods from her on account. So here's Kim Kardashian. So these are 2 accounts affected. My AR Kim K is going to go up, and my Winter Retro Sales is going to go up. Now let's record this and see its impact on the account equation. So assets, account receivable Kim K going to go up $15,000. Now if something goes up on the accounting equation on the left side, then something on the right side is also going to have to go up. In this case, it's Winter Retro Sales, and this is also going to go up $15,000. The equation balance. Well, sure, something on the left side went up $15,000 in the equal equation out, something on the right side went up $15,000. We're good to go now, we can move forward. Transaction B. Ms. Lyons purchased $11,000 of inventory on account from American Apparel. Keywords, purchased. Okay, she bought something. Would she buy inventory? How did she pay for it? Well, nowhere on here do I see cash. I see on account. So she has liability to American Apparel. Let's look at our chart of accounts to confirm this. Okay, here's our asset account inventory. That's going to go up. And we owe money to American Apparel. That's going to go up. So we're going to increase our assets and we're going to increase our liabilities. Let's go ahead and see the effect this had on our account equation. So inventory is going to be increased, what was this, $11,000. And our liability to American Apparel is going to go up $11,000. Is the equation in balance? Definitely. Something on the left side went up $11,000, something on the right side went up $11,000. We're good to go. Let's move forward. Transaction C. Ms. Lyons received $15,000 from Kim K for goods previously purchased on account. Okay? Now, this is a new transaction you haven't seen yet. She received money, so no cash is going to go up. Why did she receive it? She didn't sell anything. All that's happening here is Kim Kardashian now says, all right, wow, I forgot. I owe Miss Lyons Retroware money for stuff I bought a couple of weeks ago. So now Kim K is just mailing in the check for the goods bought. Let's look at our chart of accounts. We received cash, so cash is going to go up. Now, we received from Kim Kardashian, so our account receivable Kim K is going to go down. This is one of those tricky transactions where nothing on the right side of the equation is impacted. It's just 2 assets. Well, 2 assets are affected. For the equation to be balanced, one asset has to go up. In this case, it's cash because Kim K is paying us money, and one asset has to go down. In this case, it's Kim K account receivable. We no longer expect to receive this account receivable from her. So to show our external users that we no longer rely on this money coming in, and to show the internal users like managers, we need to go to our financial records and decrease account receivable Kim Kardashian. Don't know why I wrote an M there. Okay, so the equation balance is definitely one asset went up, one asset went down. Okay, now transaction D is going to be the same thing, but this time it's the business paying their money owed on account. So Ms. Lyons paid American Apparel $11,000 for money owed on account. She paid American Apparel. So cash is going to be affected. It's going to go down. And why does she lose money? Because she's paying off her liability, specifically her AP American Apparel. So that's going to go down. Let's go ahead and record this. So we have cash. That's going to be decreased $11,000. Why is it decreased? Because we're paying off our short-term liability or debt to American Apparel, and that's going to go down $11,000. Is our equation in balance? Yes. Something on the left side went down $11,000. Something on the right side down 1,000. Okay, let me run through this one more time. I'm paying off my account payable to my creditor, so I'm losing cash. That's the easy part. Now, I also need to decrease my account payable, because if I don't decrease this, if I as manager or an external user like an investor look at my financial records, it's going to appear that I still owe this debt to American Apparel. So to give myself the most accurate financial picture possible, I need to go and reflect this change and decrease my account payable. Therefore, now when people look at my records, it'll show that they no longer owe this money. Okay, let's do one more. Ms. Lyons withdrew $1,000 from the business to travel to a work conference. Okay, identify accounts affected. She withdrew money, so we know cash is going to go down. Now, why did she withdraw money? Because she did it for a work conference. So Ms. Lyons' withdrawals is going to be affected, and cash is going to be affected. Withdrawals is the name of the account we set up, show the total amount of money the owner takes out of the business for personal use. Let's go ahead and see the impact this has on the equation. So cash is going to go down 1,000, and Ms. Lyons' withdrawals are going to go up 1,000. Now, at first glance, this is going to look like the equation isn't in balance. If I have something on the left going down 1,000, something on the right going up 1,000, how does that remain balanced? Negative 1 rand does not equal positive 1 rand. Here's what's going on here. Did the amount of withdrawals increase? Yes, because Ms. Lyons needs to know at the end of the year the total amount of money she withdrew, so that she compare that to the year before and the year before, and really ask herself, you know what, maybe I'm taking out too much money from the business. Okay, so my withdrawals are up 1,000, but the effect that has on owner's equity. Whose money is Ms. Lyons withdrawing? Her money. She's the owner. Would call the owner's claim to the assets owner's equity. So although her withdrawal went up 1,000, her owner's equity is actually going down 1,000 because her claim to her asset account, cash, has now increased. Okay? Now again, the whole purpose of this is by recording all these transactions in specific accounts. We can get a clear picture of how this business is performing, so that at the end of the year, if we go to one of these financial statements on Yahoo Finance, let's just type in, since we're talking about clothes, come on, let's type in Abercrombie & Fitch. Too slow today. Okay, here we go. So the whole purpose of recording all of this information in accounts, so that at the end of the year, external users and internal users can pull out their financial statements and they can see how each of their accounts performed. Research, selling, all their incomes, their expenses, and then we compare it from one year, 2010, to the next year, 2011, to the next year, 2012. By recording things in specific accounts, we can get a specific breakdown of how business is performing in order to make important decisions. Should we invest? Should we loan money to this company? Are they paying enough in taxes? Do I need to get a raise? Should I fire workers? Should I hire workers? Should we expand? Etc., etc. Okay? Use this video if you need to come back and re-look at some of the examples in the video. Do so. Ask your classmate for help. Ask me for help.